Yeah, well, Graham mentioned a bit my housing history, and I suppose I'll pick up on that. The council was Argyll and Bute Council, and it's not so much that I don't want to name it. It doesn't want me to be named as attached to it. But when I was working there, I started as a trainee housing officer in the late 80s, and within the first week I had to do a homelessness assessment. So a lot of training for that, obviously. And it was a really complicated mortgage case where it was a guy who was a self-employed joiner, lost his job as part of the recession. It was just starting then, sounds familiar, and a very complicated mortgage. And I was to go through this world that I'd never heard of. I didn't have a mortgage at the time, I was only 22 or 23, and just completely different world. And I sometimes felt that a wee bit in the last 2 years through the Repossessions Working Group, and even just some of the stuff we're talking about today. There are things which are very complicated about this, and there I guess some quite exotic journeys you can go on in terms of some of the detail or some of the products that are available. So it kind of sometimes feels like quite a big journey between where we started from and where we are now with the Act almost due to go live. And it was back in November 2008 that Shelter hosted a meeting of lenders, solicitors, advice agencies and Scottish Government officials to examine whether the legislation that was in place in Scotland at that point was robust enough in light of the recession, which was just starting. This is around about the time of Northern Rock and so on. Because up until that point, the conventional wisdom had been that Scotland was ahead of the game. We had the Mortgage Rights Act 2001. We had the Mortgage Rescue Scheme that Keith will talk about in a minute, since 2003. And we had Section 11 of the Homelessness Act, which requires lenders, among others, to ensure that local authorities know about impending repossessions. They were all there or about to be made live. So it was a bit of a surprise when our neighbours south of the border introduced a pre-action protocol for mortgage repossession cases. The view generally in Scotland was that there was no need for such a measure at that stage. However, when we looked closely at the law and how the law was working in Scotland, I think that shook us out of any complacency. I think it was realised fairly quickly if struggling homeowners were to weather the storm of the recession which was looming, more concerted action was needed. So what I want to do today is give a perspective on that whole process from the perspective of an advice agency that works with people facing homelessness, as I know many, if not all of us today do. I'm going to cover some of the same territory Stephen's covered, although I think, such as the detail of that, it does no harm to repeat some of the stuff, and I will give it a slightly different gloss as well. Perhaps I pick out some of the caveats as well as the merits of the legislation. So, first of all, I think it's just worth repeating that Shelter believes that the Homeowner and Debtor Protection Act is a necessary and proportionate response to the needs of struggling homeowners. It's necessary, and I think this is critical, it's necessary because recession or no recession, the Mortgage Rights Act wasn't doing what it was intended to do. And so some of the views that are now put around that says, well, let's miss the boat with this new legislation because the repossessions haven't gone as high as we thought, or they have soared a lot, is missing the point. There was a case for reform of the legislation in any case, whether it had been a collapse of the banking system or not. And it's also proportionate because it represents a rebalancing of the rights of debtors in relation to those of lenders at a time when the lending industry has received unprecedented levels of support from us as taxpayers. And before looking at some of the detail, I do want to re-emphasise that. Yes, and I'm sure all of you know that borrowers occasionally do irresponsible, even daft things. Some even conspire in their own downfall. And many undoubtedly shouldn't have been homeowners in the first place. They kind of caught the rope ladder as it had been hauled up in front of them. But they were encouraged and aided by high loan-to-value products, self-certified loans, which John's just mentioned, and absurd value-to-income ratios. And I remember I started working for Shelter in the early 90s and held an event, not dissimilar to this, around mortgage market, and we had people up from the lending industry, from CML, very, very kind of well-informed people saying, that's it, we've learned our lessons, got our fingers burnt, no more self-certified loans, no more 110% mortgages. Did we learn? Well, I think you know the answer to that. I'm much, much more reflective about the ability of the market to correct itself in the long term. That's why I think regulation and legislation is needed in this area. Because if you think back to 1970, when our mortgage law really comes from, 1970 Act is really still the basis of our mortgage law. Completely different landscape. You've got local branches, not kind of centralised super banks. The mortgages are heavily rationed. Substantial deposits are required as a matter of standard. Home ownership's about half the level in 1970 as it is today. So isn't it remarkable in some ways that we've got almost exactly the same legal framework governing mortgages when the market and lending practice has changed so dramatically? And is the balance that was struck in 1970 between lender and debtor the right balance for today? Suggests that, at least from the point of view 40 years having passed, is a live question. So, my third point there is that the reforms introduced by the Homeowner and Debtor Protection Act are not only proportionate and necessary, they're also long overdue. Okay, we'll turn something to detail now. Stephen heralded. From an advice agency's point of view, there are three things about the new Act that are critical. There's the pre-action requirements, lay representation, and an element that I'll touch on a bit more about recall of decrees. Now, as most of you will know, that there's two parts to the Act that was passed this year. The first part is around mortgage repossessions. The second part, which I'll plead almost entire ignorance, is about bankruptcy. Our speaker from Money Advice Scotland this afternoon may be able to give some insight into that, but I'm afraid I'm fairly limited in what I know about that. Now, the centrepiece of the Act is pre-action requirements. Some of this will be similar to what Stephen said, but hopefully give a bit more detail. The pre-action requirements build on the pre-action protocol in England and Wales, which was introduced about 2 years ago, just less than 2 years ago. But crucially, they bring to that legal teeth. So the pre-action protocol in England sets out things that a lender should seek to do before going to court in a mortgage repossession case. But there are no ultimate sanctions should a lender fail to do so. In Scotland, because pre-action requirements are set out in primary legislation and the law of the land, they need to be taken into account. So what might seem like a slight change in emphasis between a protocol and requirements, change in word after all, actually constitutes a fairly fundamental innovation in the part of the Scottish legislation. So what it means in practice, that after 30th September, if Parliament approves the draft statutory instruments, lenders will be required to take all mortgage recovery cases to court. We know that already. And there are very limited exceptions to that in relation to voluntary surrender. But, this is a crucial thing, before going to court, a lender will have to ensure that it can demonstrate that it's taken a series of steps as an alternative to legal action. And it'll have to do this on a specially designed form that it'll submit to the court. If it doesn't submit the form, or the information on the form doesn't demonstrate that it's complied with those steps, then it will not be permitted to initiate action at the court. So lenders have been told, look, don't even come to court unless you can demonstrate that you've done everything you possibly can to avoid legal action. That's what I mean by last resort. So the clear intention, this is why it's called pre-action requirements, of course, is to push the focus way back up the pipe to ensure that action is taken early and it's meaningful. And that's better for borrowers, it's better for lenders, it's better for effective use of court time. So what are these steps then? Pre-action requirements? Well, they're not rocket science, and partly because they were constrained by the view that there shouldn't be a different regime in different parts of the UK. So they do mirror closely what's said in the pre-action protocol in England and Wales, and also FSA's Mortgage Conduct of Business, particularly Chapter 13, it's MCOB 13, which covers mortgage arrears and repossessions. So the pre-action requirements cover three key things, I guess. First of all, they require that debtors are given clear information about arrears and any associated expenses. The draft guidance specifically says that such information should be easy to understand, so it won't be sufficient just to put it in a kind of form of kind of Martian or something. Some statements can occasionally look like. Secondly, they require the lender to have made reasonable efforts to contact the debtor in order to discuss the debt and to come to an agreement to repay it as appropriate for the borrower. Now, I'm particularly keen to emphasise that they should be given advice about contacting independent advice at that stage, and also that any arrangements to repay debt should be sustainable for the borrower. There's no point in forcing people to sign up to a debt which collapsed within 1 or 2 months because it was just far too much. There's got to be a balance between getting money paid back, but also making it sustainable. And thirdly, it ensures that a lender should not take action against a debtor where there are other things that are happening which will be able to address the debt. For example, they've applied for mortgage payment protection insurance, or applied to one of the schemes that Keith runs, mortgage to rent or mortgage to shared equity, or where they're actively seeking to sell the property in order to trade down in the market. The view here is that you don't take action against people who are seriously trying to take other steps to address the problem. And this is quite a powerful set of requirements. Critically, of course, is to ensure that the courts actually take account of it. It's crucial that the courts look seriously at the information that's provided by the lenders in entering action, and also take a robust view of lenders who show an inclination to cut corners. Now, in our evidence to the Parliament as the bill was going through its second stage, we asked specifically that the court rules be changed to ensure that sheriffs have given a strong steer to look at these in detail. But I also think it re-emphasises the requirement, the need for increased representation of clients. The pre-action requirements have to be looked at irrespective of whether a client is represented or not. So even if there's no representation, even if the client doesn't seek to be present in court, the pre-action requirements still have to be looked at, and that's important. But I think it wouldn't be unusual to say that the greatest value from the pre-action requirements will come from clients who have either got representation or are able to do representation themselves. So the second area I want to touch on is around lay representation. Again, Stephen's touched on this a bit, so I'll go through it quite quickly. Lay representation in this context means anyone who's not a solicitor or an advocate being able to represent someone in court, which they haven't currently been able to do in mortgage repossession cases. This provision is there because it recognises that there's a shortage of capacity in the sector. There are not enough solicitors, particularly in some geographical areas, who are able to take on this kind of work, or in the absence of legal aid, clients may not be able to afford to instruct solicitors. However, the provision is not wholly kind of open. I can't instruct my Uncle Bill, for example, to act on my behalf, even if he's willing to do so, unless he's considered to be qualified, of course. So lay representatives must meet two conditions. First of all, you have to satisfy the sheriff that you're competent to be a lay representative, and you have to be able to satisfy the sheriff throughout the course of the case. And secondly, you must come from an approved organisation, and Stephen outlined what they were earlier on, include CABs, local authorities and organisations which meet certain standards for advice provision. I'm not going to say too much more about lay representation because there's a session this afternoon in the workshop, or two workshops. I think if you're interested in doing lay representation for your organisation, as a lot of people I think here will be, then I encourage you to go to that workshop if you can. However, I think it's fair to say one thing, that this will only work at best if there's actually capacity to deliver it. There's no point in us replacing a shortage of solicitors willing to do this work with a shortage of people from advice agencies. The third area I want to touch on is, the kind of opposite end of the spectrum from pre-action requirements. Right at the other end of mortgage repossession cases, any kind of eviction case, are those clients who, for whatever reason, get in touch right at the 11th hour, the day when the sheriff officers are due to come to the door and the locks are going to get changed and so on. Now, currently it's possible to get these cases back into court through a reporting process, and this opportunity is replicated in the new legislation by a specific provision for recall of decree at the 11th hour. So you can get a case back into court if it's not previously been heard, and there's some detail around that which we'll not go into just now, right at the 11th hour. So those clients who, for whatever reason, haven't engaged, it's possible to ensure that they at least get their kind of points heard. So far so good. Most acts of Parliament and most policy recommendations are products of compromise, and there's a few things that I think are loose threads still. First, there's an issue of expenses, which John touched on. And I think this is an area where solicitors and advisors representing clients sometimes express surprise about the kind of level of expenses that are charged to clients' mortgage accounts by lenders through the standard conditions in mortgage contracts. And I've seen several mortgage accounts which have very, very substantial amounts of money added to them by way of expenses. and there seems relatively little that governs what these expenses can be. There's a couple of issues with this. I mean, first of all, some of the standard provisions in the new Act require lenders to list arrears amounts, but not necessarily list expenses. And I think you can be left in a situation where borrowers have a misleading impression of how much they actually owe. And that's a problem for transparency. And secondly, I think more fundamentally, there's a question as to whether the lender should have as much freedom to simply add those expenses. As the Act was going through Parliament, Shelter drafted an amendment which would have said that in the case where a lender had been refused action in the court because they hadn't followed the pre-action requirements, then they wouldn't have been able subsequently to add their expenses for doing so to the mortgage account, which they could currently. Unfortunately, that amendment was ruled out because it would have deemed to have strayed into reserved areas. I know the Minister raised it with his UK counterpart as an area of potential reform, and I hope we'll do so again with the new Minister, whoever that is. I confess I don't know, if they haven't done so already. The second area I want to touch on very briefly is voluntary surrender. This was changed as the bill went through Parliament from a relatively formal process where, in the case of a voluntary surrender, someone had to have an affidavit signed in front of a notary public to indicate that they actually had agreed to surrender the property. This was changed in response to lenders' concerns that it was too formal to simply say they have to submit a note to the lender to confirm that they want to hand in the keys. I think that's too informal. It's swung too far the other way, and there's a possibility that people will maybe coaxed into surrender when it's not in their own best interest. So as advisors, I think, for those of your advisors, I want to look out for as well. The third area is about plain English. I'm glad Stephen acknowledged that this is work in progress. I'm going to read to you one of the bits of the draft standard forms. And it says, anywhere bank, the creditor in a standard security by you recorded in the register is applied to the court under section 24 of the Conveyance and Funeral Reform Scotland Act 1970 of a warrant to exercise in relation to 22 Anywhere Street, remedies to which he is entitled in the following default. I know that some of our clients would do that stuff. They would just freak out and they'd just bury their heads in the sand, and I think that's a problem. And I know there's other parts of the forms are a bit more plainly worded, but we need to keep working at that. And actually this is one area where I found myself getting agreement from the Law Society, which is quite unusual for Shelter. So I think this is work in progress still. Now, the last area I'm going to touch on very briefly is about tenants of defaulting borrowers, what we call unauthorised tenants. This is an area where it's kind of a bit of a Cinderella area because it's relatively small numbers and the people in this kind of situation are not necessarily very visible in the housing system. But where a mortgage is a buy-to-let mortgage, or where it's a normal residential mortgage and the lender's been told about a tenant being in situ, there's relatively no problem. I mean, the lender in taking action against the borrower will know that there's a tenant in situ and will be able to give sufficient notice that the property may be at risk of repossession. The problem arises where the borrower has failed to tell the lender there's a tenant in the property, and there's no way the lender would know. So quite often the tenant, who's quite an innocent party in this, been paying their rent in good faith, doesn't know until very, very last minute, potentially, that the property's been repossessed. Now, this problem has kind of vexed policymakers across the UK. In England and Wales, there's a new piece of legislation which got royal assent in April, which hasn't yet gone live, but covers England and Wales only, which gives tenants in this situation at least 2 months' grace to find alternative property, and it allows them to take part in court hearings, so it strengthens their position. The repossessions group originally looked at this, and as Stephen mentioned, there was a consultation towards the end of last year, but it wasn't possible to find a consensual way forward. So instead, space has been left in the housing bill, which is currently going through Parliament. It's at stage 1 just now, to allow legislation to be changed if necessary. Now, the group's concluded its discussions, and the report, I think, is going to be published tomorrow or certainly next week in time for the stage 1 debate of the housing bill. So I don't think it's a particular problem if I mention what the flavour of the recommendations is. There's two main things that are going to happen for tenants in this situation. Firstly, we're going to try and build an existing Scottish case law, which is Tamdui versus Clydesdale Bank, 1997, which is a Sheriff Court decision, which says that if a lender is taking action against a borrower and there's a tenant in place, they have to take a separate action under landlord-tenant legislation, under the 1988 Act. So that's going to be brought into primary legislation, into statute. The second issue is a much more practical one. It's How do we ensure that we know there's tenants in there in the first place? And there's a couple of recommendations here. First of all, the notices that are going to homes, to borrowers in this concession will be changed to make them directed at a tenant as well as the occupier. And secondly, recommendations also is that sheriff officers be used to serve the initial writ for possession at the property, so there's a chance at least to look as to whether there might be a tenant in place. It's not fail-safe, but it's an improvement on what we have currently. So with that little kind of detour into the kind of land where landlord-tenant law meets or doesn't quite meet law and standard security, I'm going to sum up. First of all, that the Act that we're talking about today is necessary, it's proportionate to where we are, it's overdue. Secondly, the key challenges for us as practitioners revolve around making sure the pre-action requirements are actually adhered to in court, and the provision of lay representation actually enhances the number of people who get assistance in defending a case in court. And that depends on advice capacity itself. That the law does need strengthened and improved on the possession of tenants whose landlords are defaulting the mortgage, and that there's still some loose threads on issues to do with expenses and on plain English. And with that, I'll stop.
Thank you very much indeed, Gavin, for that.